what we see is progress, but without any weakening in labor market conditions.
Hello, welcome to Financial Stockholm. Today is Monday, February 6th, 2023, and hope you're well and you've had a successful weekend and the market's looking good to you. The market certainly gave everybody a surprise on Friday with the amount of jobs that were created of 517,000. So it turned the expectations with the jobs report, and this goes in line with how the U.S. administration is talking. They see the economy is doing very, very well, and despite changing definitions of recession and having seen that they're created a kind of like new green economy in their mind with the Inflation Reduction Act, and then despite the declining household sales and declining new sales or new homes being built, and then the credit card debt, you do have some unusual things happening. So the BLS reported 517,000. We have currently in the United States 11 million jobs that are unfilled, and that's up from the previous administration where they had 8 million jobs. The unemployment rate in the United States now is at 3.4%. And but here's the interesting part. The labor participation is 62.4. So of the total 330 million people living in the United States and the 124 that are eligible to work, only 62.4% are participating. Okay, and that's versus what you had under the previous administration of 63.3%, and then you had 66% as well. But now you're currently functioning at a 3.4 unemployment rate, and you have a 62% labor participation. So that tells you there's something funny with those numbers. And then you also had the wage increase of only 1%. And so it's a very interesting development there. And also what you have to look at when you look at that number of 517,000 is in those people reporting for work, some of them are people who are returning from striking. So you had a railroad strike, and then you had a farm machine repair strike, CNH. And these companies, when they're signed their workers back, they're reported as new hires. So this 517,000 is a very kind of a funny figure, and it has to be gone through more, because one of the largest areas of participation were in hospitality and healthcare. And so that's nursing, staffing, help, not to be a nurse because that takes a certain amount of training, but healthcare help. Excuse me. So, and then also in the hospitality, these are hotels reopening, and possibly there are a number of restaurants reopening, which would be in line with after the COVID shutdown, the pandemic. So possibly you would see some of the impact there. But what the important part is that as you have the economy starting to recover, as you have a softened recession, you may see the continued rate hikes of 25 basis points by the U.S. Fed. Now we'll get comments out tomorrow from Powell and what he's thinking, but also we can see that the ECB will hopefully be going at 50 or maybe 25, because the inflation in the U.S. is certainly less than the inflation has been in Europe. We've been hurt worse by the energy cost, and so we're looking at a worsened scenario with the inflation. So the but then also remember with oil, we've seen the reduction now. We have 2 million barrels a day reduction, OPEC plus. But you still see China growing at 5.3% this year. And so that means that China growing at 5.3, India growing at 6, Europe growing around, I think we're growing around 1.5 this year. And then the US growing at around 2.8. Overall, we'll still see maybe around 3% for the world in global GDP, but that doesn't mean the oil prices will be going up, and that will help us on our inflation. So the other part to this, what could happen that could offset this? the war with Ukraine and Russia and China. China's been working with Russia the whole time. This should come as no surprise. They've been selling the technology. They've been buying the oil. India has been buying oil as well and gas, both India and China. India has even been refining the oil and then selling it to Europe. So um, there should be no surprise that China is actively involved on the side for Russia with Ukraine. And the war escalating, I don't think it's anything that the market is not anticipating, because the NATO proxy war with Russia has been something that's been happening the whole time. And for some reason, the market believes that you can have a contained nuclear battlefield of only Ukraine. So I don't think that this will slow down the market. Um, I don't think we're any scenario right now that's going to have that. Even if China took over Taiwan, and that's really kind of, China has already said that Taiwan's part of China. You have a party in Taiwan that wants to rejoin China. So it's really a question of not if, but when this happens. And this may even come through a vote. I don't think that you will need to see a war or any real warfare over Taiwan from China. So the scenario with China and Russia doesn't look to worsen, doesn't look to offset the economy. As long as we continue to have a warm winter here in Europe, that may play well for us, especially for our inflation and for our energy. And then we're, overall, we're looking at a scenario where I think we'll see the markets continuing to go up. The earnings reports are coming out. We're seeing continued layoffs. The earnings are not that strong. And this is all in favor of the Fed being able to raise rates and the ECB being able to raise rates, but not excessively raise them, so we can get some growth. So my personal feeling is you will see a forward continued increase in the market. Even in Sweden, we had some discussions yesterday with northern Sweden about the energy renewal and energy growth and corporate growth, and adding 100,000 new inhabitants to the region. And the companies are simply waiting for the Swedish government to act. So I think we'll see a continued move up in the market. Of course, this is not my advice to you on how to invest. For any investment advice, you need to speak to your advisor. I'm just giving you what my thoughts are on the market, and that's what we're seeing here. So hopefully you're subscribed, and look forward to seeing you again very soon. And have a great day, and good luck making money in the market. Bye.